The current financial landscape reflects a convergence of multiple market forces, all underpinned by investor anxieties surrounding inflation, central bank policies, and the upcoming U.S. election. Amid concerns that the Federal Reserve may have delayed easing monetary policy, stocks have traded mixed ahead of the U.S. Consumer Price Index (CPI) report, which is seen as a key indicator for future Fed actions. While inflation is expected to show muted increases, with an anticipated headline figure of 2.5% and core inflation at 3.2%, the focus is on how this data will influence the Fed's rate cut decisions at its next meeting. The market is pricing in a rate cut, but uncertainty remains about the magnitude, with the possibility of a 50 basis point reduction still on the table. This uncertainty is compounded by global economic concerns, including slowing growth in the U.S. and China. Oil prices have plunged, indicating fears that demand could falter further. The fall in global bond yields, retreating to two-year lows, adds to the risk-off sentiment, reflecting broader investor caution. Traders are closely watching U.S. interest rate options, and many are betting on substantial rate cuts before the year ends, but likely after the November election. Political factors also weigh heavily on market sentiment. The recent U.S. presidential debate between Vice President Kamala Harris and former President Donald Trump offered limited market-moving details, but Harris's support for renewable energy and Trump's focus on cryptocurrency triggered minor movements in specific sectors. Prediction markets show a slight uptick in Harris's electoral chances, which may keep a lid on the dollar as investors await further polling data. The looming threat of tariffs also hangs over the market, as Trump's past trade policies on China create uncertainty about potential future actions. Despite the broader anxiety, there are signs of potential moderation in inflation. Economists predict that core inflation may remain steady, with expectations of disinflation in key areas like housing and autos throughout 2024. However, sticky prices in services such as rent and healthcare are likely to pose challenges in achieving the Fed's inflation targets in the near term. As the markets brace for key CPI data, the overarching sentiment remains one of caution, with attention fixed on inflation dynamics, central bank policies, and the evolving political landscape.